One of the most common questions that I get asked on a daily basis is what is going to happen with interest rates in the next few months and the next few years. And that's a really good question. It's one that's very hard to answer. I'm going to try and do our best in this video. Now, before I get into that, if you haven't got time to watch this video right now, please do hit that save button and you can come back and watch it later. Please also do give me a follow if you're not already doing so, because we do produce a lot of content relating to mortgages and the property market that you might find useful. And of course, please do also hit that share button, because we do like to spread the message to more people. Lastly, and as always, we really do like interaction. If you have any thoughts, comments, views, anything that you want to say, please drop it in the comments below and I will try and respond to each and every comment. So, what's going to happen with interest rates? Well, very recently, Charlie Nunn, who is the head of the UK's largest mortgage lender, the Lloyds Banking Group, carried out an interview with Ian King, who is the business presenter on Sky TV. This is a full summary of that interview between the two of them, and there will be a link to this article in the video notes on the YouTube channel. So if you're not already following me on YouTube, please do click on my beacons link and go and subscribe to me on YouTube, because that's the only place where I can leave a link to articles. So if you want to read it yourself, you can go and do that via the YouTube channel. Now, the interview is quite lengthy, but it is one thing that I want to focus on primarily. So if I scroll right down to the bottom here, there's a section where they start to talk about interest rates. So, Mr. Nunn, who in August will mark his third anniversary as chief executive of the Black Horse Bank, said that interest rate cuts from the Bank of England expected later this year would be beneficial, but he warned homeowners not to expect a return to the ultra-low interest rates seen for most of the last 16 years. He added, of course, the short-term impact of interest rates is going to impact, first of all, the government on the cost of government debt. That will be important. And secondly, it'll make the cost of borrowing for businesses short-term more attractive, and that'll be important. In terms of the impact on the broader consumer in the UK, it'll take longer to feed through. Around mortgages specifically, we've just come off a decade where mortgage rates have been in the 1.5% to 2.5% range. The expectations that the markets have is that interest rate probably won't get below 3.5%, and that means mortgages, or the new normal for mortgages, will be in the 3.5% to 4.5% range, not the 1.5% to 2.5% range. So there is going to be a higher cost of borrowing in the economy, probably based on what we see happening at the moment. Now, this is something that I've been saying for a long time. If you are following me on social media, I have been saying that this interest rate environment that we're in right now is the new normal. We're never going to get back to those low interest rates. They were just kept abnormally low, and they never should have been. So this new interest rate environment that we're in now is what we're going to have to get used to, and we are starting to see people accepting that fact. So I think, if as expected, the Bank of England starts to reduce the base rate from the next meeting in August, and if swap rates continue to fall, then we will start to see lenders continuing the reductions in their mortgage rates that have started this week. So while we're talking about interest rates, let's just take a very quick look at the latest swap rate chart from yesterday evening. If we click over here, you can see, as always, I focus on the 2-year, the 3-year, and the 5-year rates, because those tend to be the most popular fixed rate mortgage terms that people take. So if we just scroll down a little bit, and as you can see, 26th of June, 2-year rate 4.463. That's down from where it was at the 31st of May. The 3-year rate 4.206. Again, down from where it was at the 31st of May. And great news on the 5 years, now dropped below the 4% bracket. The last time it was there was back at the end of March. The things are moving in the right direction. Something else that I want to point out to you is the forward curve. This kind of ties in with what was said in that interview with Ian King, and it showed you where the belief is that interest rates are going to be in the future. And you can see the lowest point is around about the 3.4% mark. Bearing in mind that this is all based around swap rates, and this is what lenders price their rates are. When you add in the lenders' margins for them to make a profit, you can clearly see that they have to sit a little bit higher than this expectation. So for the banks to make a small profit, it looks like at the moment, future interest rates on mortgages are going to be above 3.5%. So I'd love to get your views on this. Do you think this is fairly accurate? Do you agree or disagree with the numbers? Do you think that rates might be lower? Do you think they're going to be higher? I'd love to get your thoughts, your views, and your comments. So as I said at the beginning of the video, please do leave them below, and I will try to respond to each and every one of them. Gentle reminder, as always, please do like and share the video, because we are trying to reach a wider audience and provide more people with good value content. But hopefully for the time being, you found that video useful. Thanks for watching, and take care.